Today we're going to take a closer look at your favorite semiconductor company, Intel. Unfortunately, this stock is down roughly 56% year to date. So in today's episode, I just want to do the following. First, take a closer look at why the stock price is down so much. Also, some recent updates that the company has seen from selling its ARM holdings, from potential losing an AI customer, and so much more. At the end, I do want to share my overall thoughts of if Intel could succeed and if this is a buying opportunity that I would enjoy. Let's take a closer look in today's episode.
I want to thank The Motley Fool for sponsoring this video, and check out fool.com/Jose for the 10 best stocks to buy now. With that link, you get a promotional offer for the subscription service. Now, let's continue with today's episode.
All right, so we can see Intel right now sitting at $20.69 for the day. It was up a nice amount, 3.8%. Unfortunately, like I mentioned earlier on, year to date, the stock is down roughly 56%. And we can see from earnings that were just less than a month ago, the stock is down over 28%. So we're going to look at earnings and why Wall Street and just investors in general were not excited about this company. But some things to know is now this company with the $20.69 price target has a market cap of $88 billion. So I want to say if Intel becomes successful in what it's trying to do, I believe this market cap is super cheap. The question is, will it be able to kind of make those changes, and will it be able to take leadership or just showcase some strong products that help it grow in forms of stock price? So now I want to see its most recent earnings and see why the stock really took a huge hit. So just right off their commentary from the CEO and the CFO, you can see things are a bit dire. The first line was Q2 profitability was disappointing despite continued progress on product and process roadmaps. Obviously, in the first line, you don't want to see disappointment or anything related to disappointing from the CEO. They mentioned that, hey, look, unfortunately, they are seeing a lot of trends still on the negative side, especially things like their PC market, like their embedded market, and the list goes on and on. So right now, Intel is going to do a few things to help increase its capital efficiency. For example, unfortunately, going to reduce their workforce and going to reduce capex and kind of reduce their dividend or eliminate their dividend starting Q4. So let's look at revenue, right? Revenue for this most recent earnings was $7.4 billion in client computing. This is the products that go on your laptop, on your PCs, and that was up 9%. And that actually was really good. But unfortunately, when you look at its competitors like AMD, we can see the client revenue for them was up 49% year over year and 9% on a quarter-over-quarter basis. So investors start to worry, hey, look, even though Intel is the huge market share leader here, they're not gaining much revenue in this space, even though they should be a huge benefactor of kind of this AI PCs market. We can also see the data center market was down 3%. This is like their data center CPUs. And AMD, while they do have their their data center GPUs, their EPYC data center CPUs was up. That whole market was up 115%. They do mention that they had huge, strong sales in their data center CPUs. So again, one of the biggest fears right now is AMD is super strong, is taking market share from Intel, even though Intel has kind of progressed their technology, and you would expect them to be releasing more competitive products and products that allow their market share to stop bleeding. So this is probably one of the biggest reasons most investors are not very happy. And unfortunately, we can see their problems progress. In the most recent 2 days ago, we can see that Intel CPUs are crashing. Their 13 and 14 generation CPUs are unfortunately kind of this negative press where they're not stable in certain workloads. So that's creating a lot of instability. And outside of that, based on all those earnings, we have seen various analysts reduce their price targets. We can see most recently on August 8th, we saw a downgrade from MISO from outperform to neutral and price target from 36 down to 22. After earnings, we see various industries and companies like Barclays reduce their price target from $40 down to $25. Wedbush from 32 down to 25. We also see JP Morgan from 35 down to 26. So overall, the sentiment from analysts for this year is very bearish, as they have reduced price targets. Now I want to look at some other recent news impacting Intel, but I want to say thank you all for the support. If you want to learn more about the semiconductor market, I have two ebooks. One is an encyclopedia, the other is an earnings insight. Both are living products, so as I am getting more earnings, I'm obviously updating the earnings insight book. The great thing is this was a book that I was only going to cover at least 30 earnings, but with version 4, it already has nearly 40 companies, with many more to be added in the upcoming weeks. We know NVIDIA will be reporting earnings in 2 weeks, so I think we're going to be closer to 50 companies in this earnings book with a lot of great information. Just a quick preview here is for Intel. We discuss executive summary, headwinds, growth opportunities, supply demand, key product technologies, market analysis, revenue shift, capital allocations, financial strategies, and additional investor relevant information as well, which discusses so many things that were mentioned during the earnings call. So definitely check it out if you want to learn more about the semiconductor market. I do have a special offer. If you buy both books right now, is $20 off. And like I mentioned, if you are a purchaser, when I update the books, you get the updates for free on your email. Now, another sentiment or another thing is right now, Intel is kind of bleeding money, unfortunately. We see they're trying to push on their manufacturing endeavors. They're also trying to release a lot of new products and focus on research and development, and they're sending some of their chips, and especially these AI chips, to get built in external foundries like TSMC, and all that is costing them a lot of money. So most recently, about a day ago, we heard reports that Intel has sold its stake on ARM Holdings. So roughly $1.18 million were sold by Intel of ARM. And this was, I want to say, a few months ago. And if they did sell, hopefully they sold maybe somewhere around the top, but I personally believe ARM Holdings is a bit overvalued right now. So Intel did share and build up a little bit of cash. The amount of cash that they built up seems to be somewhere closer to about $150 million. This company does have about 11.3 billion in cash and cash equivalents. So I don't think it was a thing that they needed to do. I really wonder what the reason for this selling was, but I don't think they are in dire needs of cash that they had to sell it right away. I mean, this is pretty interesting, as we've also heard a few reports in the past where Intel did not invest in OpenAI when they had an opportunity a few years ago. So if we look Intel OpenAI, there are reports that Intel failed to kind of invest in OpenAI in 2017 and 2018. So maybe this could be one of those stories in the future where, hey, look, Intel sold on ARM a little bit too early. Another kind of news and kind of bearish sentiment affecting the stock in the past few days is today on August 15th. Yeah, today there are reports that, and this comes from Financial Times, that SoftBank's collaboration with Intel on AI chips reportedly stopped, with TSMC emerging as a potential partner. So for those that are not familiar, SoftBank, which is the owner of ARM Holdings and a lot of other tech companies, was reportedly going to Intel to build some form of AI chips to combat NVIDIA, right? They want to build AI solutions, AI chips. Unfortunately, Intel, due to things like inability to meet their demands for production volume and speed, it seems like those talks have ended and they're going to go to TSMC instead, which makes the most sense at the current moment. And this is where it would have been amazing if Intel would have done this, because it would have showcased that, hey, look, their manufacturing push is definitely going in the right direction. So something to keep in mind of, there are discussions that maybe Intel, obviously they are a foundry business, but they also need that foundry space. So Intel, one of the big risks here is Intel could be hogging up a lot of the manufacturing lines for itself in the future, and it's really limiting the amount it can give to its customers. And obviously that would be bad news, but we have to see in the future how those supply chains, how those utilization rates get spread out between Intel and other players. Now back to Intel, some recent news impacting the stock here on August 13th. Intel is expected to participate in a few upcoming investor conference on August 29th, which is my birthday. The CEO, I don't know why I mentioned that, that has nothing to do with Intel, but just plugging my birthday in there. Intel CEO will participate in a fire chat, kind of discussing its business and corporate strategies with Deutsche Bank. And on September 4th, we are going to have the CFO do it with Citi Global Technology. So if you are an investor of Intel, you're going to want to follow that. Another news on April 14th, Intel announced that they are partnering up with Karma, which is a first and only ultra luxury automaker. I don't know what that means, in California. And they are working with them to kind of bring Intel's automotive solution to their entire vehicle platform. So we can see Intel also moving into the automotive market. Intel also brings discrete GPU muscle to the vehicle cockpit to power next-gen automotive AI. So again, we are getting a lot of companies focusing in the AI space, and now Intel is releasing a discrete GPU, which can obviously help with AI workloads. Now, some great news for Intel. We can see here on August 6th that they are making some nice milestones on their manufacturing push. It seems like Intel 18A and processors for both the consumer and the server market are out of the fab and have powered on and booted operating systems. And those are on track to start in 2025. So there is some hope here for Intel's manufacturing push, as Intel 18A is using a lot of technologies like RibbonFET, like PowerVia, and other types of technologies that are gonna hopefully take them a nice step in against competition. Now, after earnings, I want to see valuations. Revenue estimates, unfortunately, after earnings have both declined for the current fiscal year and the next fiscal year from analyst estimates. So it seems like analysts, like we saw their price targets decrease, we also see revenue estimates decrease. So right now, investors and analysts are not that excited about the future for Intel. And then obviously we can see the same thing about their earnings per share. Just right after earnings, we can see numerous analysts start to reduce their earnings per share estimates for the current fiscal year and the next fiscal year. Now, I want to end this episode with a final question. We have Giancarlo ask, "What's up, Jose? Just curious your thoughts on Intel. You think they can turn things around in the future?" And I mentioned I'm dropping a video on this later today, hopefully answering this question instead of question. And can it turn things around? I think yes, it's possible. It's never impossible for Intel to do it, and I want to say the probability of them doing it is higher than 0%, right? I wouldn't say it's 50% of them being able to do it, but at least it's higher than 0%. But it won't be easy, right? They're definitely moving in the right directions with developing their manufacturing push and developing nodes that can help them with their server CPU and their consumer CPU as well. So pretty much everything really is under the umbrella. If their manufacturing push goes well, if they're developing great nodes, a great manufacturing step, then it will help them make even better CPUs for their core products. So if they're able to do that, then they will win big. And for me, Intel will either do very good or very bad. And let me explain. If they do not do well in this manufacturing push, they're going to lose out a lot of market share on also their core CPU products for the server and the consumer market, which will make the stock do really bad. Now, if they do good or even decent in their manufacturing push, they're going to be able to grab customers. They're going to be able to continue to hold market share on their CPU side for the server and the consumer. And I believe that will be enough to drive the stock price really, really up. So for me, I think if one thinks they can do well, in my opinion, I think the best play, and this is not advice, would be options. And it would be, for example, a $40 call, strike price call for January of 2026. I was just looking at that, and that's about $1, so $100 per contract, and that's about 1 year and a half from now. So there's plenty of time for them to showcase manufacturing developments. And like I mentioned, if those things do really well, a market cap of 88 billion seems very cheap, and I do believe they can 2x very easily if things go well. I personally wouldn't buy individual shares of Intel. I think it will be dead money until we see that great news. And for that reason, I think a very far out the money call option would be my best way to play it. Again, not advice, but just my overall thoughts. Now let me know your thoughts in the comments below. What are you thinking of Intel? Do you own right now? Do you plan on owning? And appreciate the support on the ebooks.